Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex language of business and finance to make it simple for you. And as you can see from the title today, we are diving into a proxy statement from Performance Food Group Company, a report that basically tells us how much the top dogs are getting paid and what the company is planning for the future it is like. Peeking behind the curtain of a major corporation, so buckle up, because we're going to break down what Performance Food Group, or PFG, is telling its shareholders about its performance, its strategies, and of course its executive compensation, a topic that always raises eyebrows. And before we dive into the details, if you love getting these straightforward breakdowns of financial documents, make sure you are subscribed and hit that notification bell. And hey, if you want to chat more about these numbers, join our Discord community linked in the description below. There is a lot to unpack here, so let's get started. First off, the company is looking to elect 13 directors, and they are asking shareholders to vote for each nominee at their annual meeting, which happened in November of 2025. These directors are the folks who guide the company as big decisions, and the report details their experience in areas like finance, technology, and even the food industry itself. You know, the kind of people who can steer a massive company like PF. Now let's talk about the money and how the company performed in fiscal year 2025. PFG reported some impressive numbers. Total net sales went up 8.6%, hitting a huge $63.3 billion. That is a massive amount of food and drinks being delivered. Gross profit also saw a healthy increase of 12.8% to $7.4 billion, which shows they are making more money on what they say. Our adjusted EBITDA, which is a way companies measure their operating profit before certain expenses, also jumped up by 17.3% to $1.8 billion. This is a good sign that the core business is doing well, even with all the different things they have going on. When it comes to those director nominees, the report lists them all out with their ages and the committees they serve on. Each one brings a different set of skills like CEO leadership, corporate governance, and experience in the food service industry. Itself, it is really interesting to see the mix of backgrounds they are aiming for on the board of directors. They really break down the expertise each director brings, and it is quite extensive. You'll see things like CEO leadership experience, finance and capital markets, knowledge, and even cybersecurity experience. It shows they are trying to build a board that can handle all aspects of a modern large business. Let us look at a few of these nominees. Barbara J. Beck, for instance, has a ton of experience scaling businesses and leading through market changes. Danielle Brown brings over 25 years of senior leadership in driving digital transformation. And William F. Dawson Jr. has decades of private equity leadership experience, which gives him a strong investor perspective. And since PFG is a massive company with a huge distribution network, all this experience is crucial. The Audit and Finance Committee, the folks who oversee the company's financial health, are also listed here with their key duties. They are responsible for making sure the financial statements are accurate and that the company's internal financial controls are strong. Then you have the Human Capital and Compensation Committee. This committee is in charge of the company's overall compensation philosophy, and they review and approve the pay for executives like bonuses and stock awards. They also look at human capital strategies, which means how the company attracts, trains, and keeps its employees. The Nominating and Corporate Governance Committee is all about how the company is run. At a high level, they focus on identifying director nominees and reviewing corporate governance documents, making sure the company follows good practices. And in today's world, it is no surprise they have a Technology and Cybersecurity Committee. Their job is to review the company's IT planning strategy, and especially its cybersecurity measures. This is super important for a company that handles so much data. Now let us get to the juicy part, the compensation for these directors. For fiscal year 2025 employee directors earned a base cash retainer of $105,000 plus additional fees for being chairs of committees. And get this, they also received stock awards, totaling $180,000 for their service. As a director, this is a significant amount of compensation reflecting the responsibility of their roles. When it comes to the company, as financial reporting, PFG is asking shareholders to ratify the appointment of Deloitte TIMP Touch LLP as their independent registered public accounting firm for fiscal 2026. This is basically a stamp of approval on the auditors who check the company S books. The fees paid to Deloitte Touch LLP for the fiscal year ended the 28th of June 2025 were quite substantial. Audit fees alone were $3.4 million, with additional fees for audit-related tax and other services totaling almost $4.7 million. This is a significant expense, but necessary for transparency. Let's talk about the compensation of the named executive officers, or NEO. These are the top earners. George L. Holm, the chairman and CEO, had a total compensation of over $11.6 million in fiscal 2025. A big chunk of that was in stock awards, which is common as it aligns their interests with shareholders. The report shows how this compensation is broken down. Generally, it includes base salary cash incentive opportunities and long-term equity incentive opportunities. A significant portion is at risk, meaning it depends on the company's performance, and this is a good thing. For the annual cash bonus opportunity, the NEOS, target bonuses were based on net sales growth adjusted EBITDA. A growth and strategic initiatives, this pay-for-performance structure is designed to reward executives for hitting key company goals. And then there are the long-term equity incentives, which are designed to encourage the creation of shareholder value over several years. These are performance shares and restricted stock which vest over time and are tied to long-term goals, like relative total shareholder return, which is how PFG's stock performs compared to other companies in the market. Looking at how executives realized value from their stock in fiscal 2025, George L. Holm had some significant option exercises and stock vestings, totaling over $23 million in value, realized this shows that the stock awards have been successful in providing value when the company performs well. Now, for some numbers that always grab attention, the CEO pay ratio in fiscal year 2025, the CEO's annual total compensation was over $11.6 million, while the median employee S compensation was about $86,000. This results in a pay ratio of 136 to 1. This is a big difference though. It is important to remember that PFG is a large and complex company with many employees, and the CEO of such a company naturally earns significantly more for their leadership and responsibility. The report includes a pay versus performance table. This table shows how the compensation actually paid to the CEO and other NEOs compares to the company's financial performance, like total shareholder return net income and adjusted EBITDA. Over the last few years, this is a really important section for understanding if the pay aligns with actual company results. Looking at the non-GAAP reconciliation, you can see how they arrive at adjusted EBITDA for fiscal year ended the 28th of June 2025. It was $1.7669 billion, a nice 17.3% increase from the previous year. This metric really shows the underlying profitability of the business. On the GAAP side of things, diluted earnings. Pear's Hair was $2.18, which was a slight decrease from the prior year. But when you look at the adjusted diluted earnings per share, which was $4.48, that actually saw an increase of 4.2%. This highlights how sometimes non-GAAP measures can offer a clearer picture of ongoing operational performance. So what is my take on all of this? Performance Food Group is clearly a massive and growing company. They have strategically expanded through acquisitions, and their core business seems healthy with strong sales and profit growth. Their executive compensation is heavily weighted towards performance-based equity, which is generally a good sign showing they are trying to align leadership with shareholder interests. The pay rate is significant but not entirely unexpected for a company of this size and complexity. The key risks will always be related to the food distribution industry itself, which can be sensitive to economic downturns and competition. But PFG seems to be navigating these well with a clear strategy and a focus on operational efficiency and growth. The company is making smart moves by investing in technology and sustainability, which are critical for long-term success. The director nominees bring a wealth of diverse experience, and the board structure with independent committees looks solid overall. PFG appears to be on a strong trajectory, but it is always wise to keep an eye on the broader economic factors that could impact the food away from home market. Alright, that is our deep dive into Performance Food Group Company's proxy statement for 2025. What are your thoughts on their financial growth and executive pay? Let me know in the comments below what else you'd like us to decode. If you found this video helpful, please give it a thumbs up and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching. See you next time.